A $4 billion liquidation in 70 minutes. More than 36,000 crores were wiped out from silver futures, as the silver futures went down by more than 10%, while in the same time the ETF went down by more than 20% from the highs. One of the major factors that caused this meltdown is the increase of margin requirements by CME. Now, CME is the Chicago Mercantile Index, which is the largest futures trading index in the US and the world's second largest exchange in terms of trading for futures and options. Now, recently, CME increased the margin requirements for all its commodities. And when margins are increased, the traders and investors are either forced to sell their positions or they are forced to put up the cash in their accounts. And mostly, the traders choose to sell and liquidate their positions. Simultaneously, one of the world's largest bank and asset manager, JP Morgan, filed a Form 8K with the US SEC. In simple terms, Form 8K is a current report which an institution should be filing with the SEC to announce any major events that the shareholders of that company should know about. On the report filed on December 27th, they recognized a $4.8 billion loss in silver position. They flipped from 200 million ounces of short positions to more than 750 million ounces of long positions in silver. On top of this, January 1st, 2026 stands as a very important day in terms of silver exports, specifically with China, as China has announced a curb on export qualifications for their companies. We already have seen that many of the countries are reporting a shortage in supply of silver. On top of this, a country that controls 70% of global supply of silver is now planning to curb its exports. The gold-silver ratio is now at 60:1. It means that how many ounces of silver is required to match 1 ounce of demand of gold. The historical gold-silver ratio is 30. At a gold-silver ratio of 30, silver should be at $150. This is followed by a monthly surge of more than 45%, a yearly surge of more than 160%, and a weekly up move of more than 25% in one single commodity. This is serious money stepping in and can also be labeled as exuberance. On MCX, the multi-commodity exchange in India, the volumes in silver have just gone berserk. In the last week of December 19th to 26th, the value of silver contracts traded on MCX ranged from 800 crores to 2800 crores to 3500 crores to 5800 crores, and now standing at 14,930 crore. Now, silver is surely a hot commodity right now because of its uses in AI chips, semiconductor chips, solar panels, automobile industry, EVs, and whatnot. How much of that is priced in, only time will tell.